high interest rates are hurting particular sectors of the economy more than others.
We understand people are under pressure.
Consumers and business owners are doing it tough. Although the money situation is a bit tight, they did see a stronger than expected lift in their retirement savings last financial year.
The first half of the year, share markets didn't perform particularly well, and share markets are a big driver for most people's superannuation balances. But from about November 2023, international and Australian share markets really picked up.
For those with their super in a balanced option, which is most of us, the average return was about 9%. But for those who took on more risk with a growth option, the average return was 11%. The worst performing sector was consumer staples, with Coles falling 8% and Woolworths down 15% over the past year.
And that was predominantly driven, I think, by obviously the cost of living pressures and the political pressure being put on those companies. But we also had a change in CEO at Woolworths too.
It wasn't a great year for the mining sector either, especially lithium stocks like Core Lithium and Lake Resources, which slumped by almost 90%, mainly because of a 70% plunge in the price of this electric battery component.
Investors were chasing a lot of companies that were not hyper viable. There was a lot of hype.
On the flip side, the best performers were financials, consumer discretionary and tech-related sectors. That drove the Australian share market up more than 12% when you factor in dividends.
One of the big themes in the last 12 months has been AI, stocks that are exposed to that. In Australia's case, it's been the data centres, whether it's NextDC or Goodman's, have performed exceptionally well.
To a large extent, the performance of our super funds and the share market has been driven by Wall Street, which is trading near record highs. That's due to a jump in the share price of companies which dabble in artificial intelligence, like the AI chip maker NVIDIA.
The performance of something like NVIDIA is the dream for many investors. You've had an opportunity to triple, quadruple, many times your money if you've held that stock long enough.
Most workers in Australia will soon get some sort of a pay bump, but not to that extent. From the 1st of July, the Stage 3 tax cuts will take effect. On top of that, the minimum wage will increase to $24.10 an hour, and your employer will have to contribute more to your super, with the guarantee rising to 11.5%. But there's a bit of uncertainty ahead.
We know that Australian households are the second largest debt holders in the world, and that has massive implications for our financial sector if things go south. So if we see an uplift in unemployment, for example, you'd be pretty worried about that.
The final risk I'd call out is the US election. What will be the impact if Trump is victorious, and the impact on tariffs, global trade?
And in a roundabout way, your retirement savings.